Hello everyone, welcome to the Stock Trading Tutor channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free. Now, let's look at what are trading biases. Now, what is a trading bias? Bias is a human tendency that affects our behavior and perspective based on predetermined mental notions and beliefs. There are conscious and unconscious biases. Conscious biases are tendencies towards behaviors and ways of thinking that a person is aware that they have. An unconscious bias is when a person's behavior is altered or influenced by a belief they aren't completely aware that they have. So let's look at some of the trading biases that can be encountered by people who generally trade in the stock market. First is the anchoring bias, then is recency bias, the loss aversion bias, bandwagon bias, and confirmation bias. So let's look at anchoring bias first. This is a tendency to anchor on the first piece of information you receive when making the decision. One way to overcome this kind of bias is to analyze the historical data but do not hold on to the historical conclusion. Instead, you research more and make a decision based on all the facts. Next is recency bias. This is a tendency to overvalue the most recent information available to us because that information is especially fresh and salient. So, one way to overcome this bias is to don't learn from the recent experience but rather from your trading over a longer period. So, please learn from your overall trading experience rather than from the most recent one. Next is a loss aversion bias. This is a tendency to dislike losing a lot more than they enjoy winning. When losses loom larger than the gains of identical magnitude, traders feel more discomfort from the potential loss. One way to overcome this is accept that you will only ever win at best 50% of the time and that losses are an inevitable part of the cost of doing business. Next is the bandwagon bias. This is a tendency to want to conform and be a part of the crowd, to do things because others are doing them or believe them. One way to overcome this is that some things is not true simply because everyone seems to say so. Never read or listen to the market commentaries or news when you trade. Use them during your research time. Next is confirmation bias. Sticking with information that validates our own point of view and dismissing any input that conflicts with our reasoning is known as the confirmation bias. So, one way you can overcome this is when everything is confirming your market view, think again. Look for reasons against making a trade and not for it. Let's look at some of the effects that happen because of cognitive bias. First is deviation from your trading plan, then it keeps you and stops too tight and gets whipsawed. You exit or buy at the wrong time. You exit your trades too early so you make loss or you at least avoid the potential gains that could have had if you had just stayed into that position for a little longer. Next, you develop a resilient reliance on the media or a crowd driven information. You miss opportunities to get in a trade because of a preconceived notion of price. You hang on to losing trades and you delay cutting your losses and you hang on to them. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel. If you'd like to create a free Demat account with Alice Blue, click the link in the description and fill out your details. You'll also get intraday recommendation calls and you can learn robo trading software for free.